Hey everyone, it's Kevin Jennings here with Berkshire Hathaway, and today I want to talk about something that often catches a lot of home buyers and sellers off guard, which are closing costs. So whether you're buying your first home or maybe selling your current one, understanding closing costs is essential for a smooth transaction. So what exactly are closing costs? So closing costs are fees and expenses that buyers and sellers must pay at the end of a real estate transaction. These costs are separate from the home purchase price and typically range between 2 to 5% of the loan value for buyers. Sellers often have their own set of closing costs, including commission fees or any other charges. So what do closing costs include? So for buyers, it's a little bit different. Buyers are responsible for several key closing costs, which include lender fees. So when taking out a mortgage, lenders often charge various fees, such as, loan origination fee, a percentage of the loan amount, a credit report fee, maybe underwriting and processing fees. Or if you're looking to buy the interest rate down, you're going to have discount points, which are, of course, optional. Then you're going to also have title and escrow fees. So these fees include that the property legally transferred to you, the buyer. So they include like a title search, a background check to confirm there's no liens or claims against the property. You also have title insurance, which protects you, the buyer, and the lenders from ownership disputes. Now, escrow fees, they actually cover and handle the funds of documents during the transaction. You also have appraisal and inspection fees, but most lenders actually require an appraisal to verify the property's value. And a home inspection fee is to make sure that there's no possible issues with the property that you're unaware of. Now, you also have prepaid property taxes, homeowners insurance. So lenders typically require buyers to prepay for property taxes and property insurance for the first full year. You also have recording fees and transfer taxes. So these are government imposed fees that essentially record the home sale in public records and transferring the ownership into the buyer's name. Private mortgage insurance or PMI and HOA fees. So if you're putting less than 20% down, you would have to pay for PMI. And of course, if there's any HOA fees regarding the property that you're purchasing. So for sellers, it's a little bit different, not as many. So sellers have their own closing costs to consider, which actually includes real estate agent compensation, typically the largest seller expense. This fee is split between the listing and potentially the buyer's agent, depending on how it's negotiated, typically ranging between, say, 5 to 7% of the sales price. Sellers also have title and escrow fees. So sellers often pay for a portion of the title insurance and escrow service fee, depending on the agreement. They also have transfer taxes and recording fees, just like a buyer would. Any home repairs or concessions. So if a buyer requests repairs after an inspection or negotiates closing cost assistance, the seller may need to cover those expenses. Of course, you have a mortgage payoff or prepayment penalties if applicable on the loan terms that the seller originally had. So big question, who pays for closing costs? So buyers are generally responsible for the most of the closing costs, but sellers often pay for real estate agent compensations, transfer tax, and other title fees. However, buyers can negotiate for the seller to cover a portion or all of their closing costs within a purchase and a sales agreement or offer. So how do we reduce the total amount of closing costs? So for buyers, it's super important to shop around for lenders to compare fees, ask about closing cost assistant programs, or maybe even lender credits. Negotiate with the seller to cover part or all of the closing expenses. Now, for sellers, it's super important to work with an experienced agent like myself to price the home competitively and avoid costly concessions. Now, it's also important to be proactive about potential repairs to avoid last-minute negotiations that could increase those expenses. So I hope this short video helped. Obviously, I'd love to further assist you and answer any questions that you guys have. Again, my name's Kevin Jennings with Berkshire Hathaway, always here to help.